Hello, everyone. I'm joined today by my two very good friends and real estate professionals. It's Rosanna Zimlansky and Sarah Feldman of VI Properties in Hewlett, right? In Hewlett, Hewlett, Long Island. We've been working together for a while, and we decided to basically get in front of a camera and answer some timely questions about what's happening in the market, what's happening with mortgage rates, what the future holds. I kindly ask Rosanna to please be our moderator today, and Sarah and I will try to do our best to answer your questions, guys. Go ahead,
Great.
Rosanna.
Thank you. So, to our viewers who are not familiar with Robert Nizov, he is from R&J Capital. And like he mentioned, we've been working together for quite a while, and his level of expertise is really exceptional. So,
Thank you.
we've come here to ask some questions. So, let's start. So, the first question is what everybody wants to know about: how has the shift in interest rates affected the housing market?
Okay, so yes, it's a big question. Obviously, what happened was everybody remembers, and just in the beginning of the year, rates were in a 2, 3, 4% range. Depending on when and depending on the situation. They are now a lot higher. They're maybe closer to 7%. When they went from 3 to 4 to 5% range. Interestingly enough, everybody predicted already then a crash. It didn't happen. In fact, the activity continued to be strong. Once it went to above 5-6%, it got a little bit slower. So buyers are more cautious. There is obviously an affordability concern, but also interestingly enough, we did not really see or did not really experience the big supply of homes increase because sellers probably think, and Sarah, maybe you can answer this question as well. Sellers probably think that they're sitting on good interest rates, and what are they going to do after? So to summarize, the activity has slowed, but it did not just died. People are still making deals. Buyers are buying homes. Sellers are selling homes. People are getting mortgages. People are getting homes full cash from what I understand without financing. So there is definitely an activity. It did affect. It went down. It's not as much. But remember, we had a very unhealthy and overrated housing market where prices went up really fast. So now, to me, it's more it's stabilizing. It's again compared to 2021. To answer your direct question, it is there are less deals on the market, less deals what we see, but at the same time, and we'll hopefully talk about this. Maybe there are more opportunities for people.
It's funny that you said unhealthy market, and I definitely agree to that because a good negotiation is when both parties walk away happy from it, and it wasn't necessarily the best negotiations that were occurring. So it's an interesting choice of words, but kind of, and both of you, if you could do that, your sort of, you know, 30 seconds, elevator pitch answer in lieu of the interest rates and the fact that they're actually higher. Why should buyers still buy? And if both of you could kind of address that.
You, Sarah?
Well, buyers should still buy because regardless of what's going on with the interest rates, first of all, there's so many creative ways that any lender, Robert especially, we love working with Robert, can work with you and figure out what program would work for you. And to own a property, there's nothing like owning a property. I see customers all the time or clients that we've had in the past that see us that were also worried as the mortgage rates went up, and they did buy, and they're just so happy that they own a property and they're work from home, or whatever it is, that they're able to enjoy their own home and they're not paying somebody else's mortgage,
Right.
which is like a big thing. A lot of people that are telling, that do have these fears of buying or getting a mortgage because of the interest rates. And then when I ask them, like, oh, are you selling, are you going to sell your house now? And they tell me they're renting, and it's like, okay, well, you're paying somebody else's mortgage then.
Right.
So
Right. So exactly, actually, was my thought. I'm going to just give two big reasons to everyone. First of all, when people say, "Look, the rate is 7% or 7.5%," when you rent, you're paying 100%.
yeah,
So that's that's something to remember. Number two, obviously, you build equity. You make a payment. I'm going to give you an example. Let's say your mortgage payment is 3,000 a month, and part of it is interest, part of it is principal. So part of this 3,000 payment goes back to yourself, not to mention the home appreciation. I was giving an example. There's a house that in the neighborhood where I live. 100 years ago, it was 7,500. Now the same house is about $1 million,
it's an
and
investment.
it's definitely
Yeah.
it's definitely an investment. Okay, so basically building equity and understanding that rent is 100% interest.
Yeah.
That's the answer to the question that I have.
Okay, agreed. Buying a home is also a very emotional decision. So there's always going to be buyers in the market. But if we want to flip sides right now and talk about sellers, so
Sure.
we all know that inventory is rising nationally. But would you agree or disagree? Is it keeping up with the demand?
So at the moment, and I just on a personal, I guess on professional level, I take a lot of interest in the housing trends. So what's happening? The inventory is rising, but and maybe you guys being in the field can hopefully confirm it. There's still a lot of interest from buyers to be in the home. Sometimes it's an affordability question. Sometimes there could be other reasons. So my, I guess, take on it is if somebody is thinking of selling, they should be selling now because we don't know what future holds. There might be a short-term dip in prices because of the rates. I'm still um, with my opinion that long-term prices of homes will go up. They might have a short correction, for the next few years. So if anybody wants to sell the property, whether it's an investor or someone is downsizing, they should certainly consider this time. That's my opinion. Right now, while it's still not a buyer's market and buyers do not completely dictate, although it become a lot better for them, maybe sellers should consider selling. And I don't know, what do you think, Sarah?
So, Sarah, to piggyback on that, you're at a listing appointment, and obviously, we encourage sellers now more than ever to make sure that they're listing their home with an experienced agent who's been in this
Which is us.
industry,
Just
which is
FYI.
us, right?
Oh,
Who's
yeah.
been in
No.
this industry for a while and really knows the ins and outs of the housing market. So you're at your listing appointment, and what would you tell your seller? Why is now the best time for them to sell?
Well, first of all, I mean, there's various reasons why people want to sell their home. So there's always going to be a buyer. So if they still have these reasons, they want to upgrade, they want to downsize, they want to move out of town, there's no reason to not sell. There is going to be somebody who will buy their home, and the property values have gone up significantly. They will most likely be making making money off of the sale of their home. The thing that I'm seeing right now really is that people are afraid to list their house because they have this perception that there aren't, people aren't buying because of the interest rates. And they have this perception of, well, what am I going to do when I sell my house that I had a 2% rate on and now it's 7%? I'm going to buy something for 7%. It makes no sense. So they just are afraid, really. So what would you tell them, Robert?
I mean, I hope I partially covered it. My only, I guess, if I were a seller, while it's still, you see, the market is turning in terms of who is in the driver's seat. Definitely a year ago, there were sellers. And I, not even being in exactly in real estate, I knew this because we were getting, contracts that required no mortgage contingency, where people, then the sellers would say, okay, look, you want to buy my house? I don't want to be, to be conditioned to you getting a mortgage. You get it, great. If not, obviously we got it done. But right now they no longer can dictate this because I think the pool of buyers has shrunk. If the rates will continue going up, and if I may, Rosanna, just give my opinion, I think rates will continue going up at least for a period of time because the Federal Reserve is really fighting inflation. That's their main goal. They are inflicting a pain. They're basically not really caring about what's going to happen to an average American, um, so to speak. They need to kind of break this pattern where everything is going up. And even if it goes down, if let's say gasoline prices go, grocery prices go down, they just want to make sure that inflation is around 2%, which is around 8 now. So there might be some work to do. So until that point, the rates will be going up. Once we're at 8, 9, 10%, if it gets there and somebody really needs to sell, at that point, they will probably need to reduce the price of the house significantly and they may lose money. That's why I think right now, if somebody is thinking to sell short term, should do it now.
So you both give great reasons for why a seller should sell, but I know we've spoken about this before, and maybe you could elaborate on this program. But in order to incentivize some buyers, we've discussed something called the 2-to-1 buy down.
Right.
Can you elaborate and explain what that actually means?
Okay, so this program has been around for a long time, but there was really no interest in it when the rates were low. And I'll explain why, and we'll make a reference to one of our videos in this video that explains it fully. But basically, this is what it is. Let's just say the interest rate today, and I'm just going to use 7% for simplicity. So 2-to-1 means it gets reduced by 2% the first year and by 1% the second year. Meaning, let's say you close today. Let's say you close January 1, 2023. So for entire year 2023, the buyer will only need to pay 5% interest rate. It's reduced by 2% from the initial rate. 7 minus 2 is 5. So 2023 will be 5%, or year one. So first 12 months. And then the second 12 months will be 6%. And after this 24-month period, it goes to 7%. So depending on the loan amount, depending on what it is people are borrowing, buyers can save a lot of money. And there's also hope that within this 2-year period, rates will fall and they can refinance. But somebody needs to pay for it. It's usually the seller, but they need to pay depending on the initial rate, depending on what payments are, what the loan amount is. Seller is offered to pay for this. So I am offering it to you as professionals to talk to your sellers and say, look, instead of reducing the sale price, pay this buyer's closing costs towards buyer's payment, towards buyer's
It's like
purchase
a concession.
price. It is exactly a seller's concession. Make this concession of whatever the amount is and get the house. They will be happy because for the first 2 years, they can actually get a break.
Right.
Okay. Program is available for pretty much any scenario, whether it's FHA or VA or a conventional loan. So, broad number of borrowers can take advantage of it.
And as you see, there's so many different programs that, Robert has so much knowledge on these programs that are available to you that can help you figure out how to purchase your house without having all these fears that everybody's going through.
Well, to sort of round
Yeah.
out this discussion on interest rates, ultimately the question lies in, are there other options available to buyers? Is there a way, are there different mortgage options? Even discussing, buying mortgage points. What are some ways or some programs that are available to potential buyers to make sure that they could get an affordable mortgage?
Okay, so yes, this is. I think this should also be something people, that they should consider if they can afford it. Don't necessarily look at the interest rate only. Interest rate is, mortgage interest rate is an important, obviously, an important aspect. But don't look at it is the only factor in determining should I buy or not. So there are programs, and again, we will have a link to our other video. There are options like interest-only mortgages where the payment, what I'm going to tell you now, will reduce the payment. Um, interest-only mortgages, okay, where you pay, buyer pays interest for the first 5 to 10 years. There are also 40-year terms. Okay, you get a longer term. Everything can change in a few years when the rates go down. Also, go maybe from kind of higher cost areas, and we see this in our local market that a lot of people from Queens are actually moving to Long Island because there's more land, prices are a little bit more affordable, and this is where you guys operate. So go to those areas, and now all of a sudden, from where you can't afford, now you could afford it. And I'm not suggesting that this is the only combination, but I've just seen a lot of people do this. There is also one other thing where try to save some money or ask family and put more money down. You can get both a better rate with a bigger down payment, and obviously the loan amount will be lower. You also, Rosanna, you mentioned about points. So
Yes.
you'd like me to tell how?
Yes,
what
I
it
would,
is?
because I spend time out with buyers, and it's just a question that comes up, and they're like, how does it work? Buying mortgage points, reducing your overall payment. So if you could elaborate a little bit on that, that would be great.
Okay, so let's consider a loan amount of 400,000. Somebody needs to borrow 400,000, and let's say the going rate is 7%. Okay, what the buying points is the bank will say, look, if you give us a one-time prepayment of, let's say, $4,000, which is exactly 1 point. Basically, 1 point is 1% of the loan amount. So in this case, 400,000, 1% is $4,000. If you give us $4,000 in upfront at closing, instead of the going rate of 7, we'll give you maybe 6.75 or 6.8. So here's the idea. They're saying, look, your payment will be lower all these years, but for this, give us a one-time payment. And those, supposedly those two payments are actuarially equivalent. So and they can go farther. You can buy 2 points, which is 8,000, and maybe get a rate of 6.3, 6.7. Again, if the initial rate is 7%. Now, it's different from bank to bank. It might be different from a buyer to a buyer, but what I gave you just an idea of how it works.
How that works.
I hope that's
No,
it's clear.
it does. Yeah, I mean, ultimately, people are just trying to find a way to, purchase their home, make it affordable, and get to suburbia. Ultimately, that's where they all want to be.
With remote work possibilities, so I guess it became very lucrative.
Yeah,
absolutely. So, just shifting a little bit in the type of buyer. So, we also work with a lot of investors, and investors may come into properties that are inhabitable. And in that case, they're not cash buyers, so they're still looking for a mortgage.
Right.
What's available to them?
We get these situations all the time. So normal lending, the conventional lending, the FHA lending, any property that they give money against has to be habitable. It has to be in a livable condition. You cannot have ripped out pipes, or kitchen not finished. But what to do when someone wants to buy a home? And I'm sure you probably come across listings, those type of listings. So we do have a program. It's called Fix and Flip or Fix and Keep, where an investor or potential home buyer can, wants to buy it for primary residence, can buy it. The bank also gives money for renovations. Okay, they can.
Can I interrupt you for a second?
Sure.
Do they give it in stages?
Yes. Okay.
How does that? Because I think I've heard of similar programs. I don't know if it's exactly the same one you're describing, but they give it as you. So can you elaborate on that?
So yes, okay. So basically, they don't want to just give money and then, the buyer refuses to do any work. They want to make sure their investment is protected. So I'm going to give you an example. The house is 500,000. Okay, the buyer or borrower, we call them, puts 100,000 down. they close the deal at $400,000 mortgage, but he needs 120,000 for renovations. So they give it in stages. They give 20,000. They come. They send an inspector to see that the work, which is worth this $20,000, is done. Then they cut the second check. Then he comes back again. Comes back again. So that's how they give money in installments. And it has to be, if there was no progress made, or progress was only made for $5,000, that's how much they're going to get.
And are the rates comparable to what you would get with a conventional mortgage, or are they, substantially higher? Or
They're a little higher. They're a little higher for the because obviously there's more risk. What the bank wants ultimately, that people can use the house, either live there or rent it, and the mortgage payments are made on time. That's all they want to make sure.
Right.
So because even if they don't pay and they're now stuck with this asset that is not livable, they can't even sell it. They have to come fix it, spend additional money, and only then put it on the market. So they want to make sure that the property is they call the collateral. The collateral is used for it can be used by people.
Habitable.
It's habitable,
right?
Right.
Okay, I think that kind of rounds out my questions. But as I mentioned, I'm part of another half, Sarah over here. So
I feel like we did
do
all
you
the
have
questions.
anything else that you'd like to ask Robert before we conclude?
No, I really think we covered everything. I think we covered everything. Is there something that you think that we did not cover? Yeah, you want to ask us a question?
I do have a question, just
Okay,
because
great.
of always my curiosity and as I said, interest in the housing market. How's the market on Long Island where you operate? You operate primarily in five towns and in other areas, maybe?
So primarily in the five towns, but we do work along the South Shore, so Oceanside, Merrick, Belmore. And that kind of relates back to your original, the original discussion with the fact that although there are probably more listings, but it's still not keeping up with the demand. So we're still struggling to find inventory,
Wow.
and we're hoping that that these shifts are going to bring more sellers to the market. We're definitely confident that we're still getting top dollar for these homes. Like so far, we have not seen any sort of major shift in what buyers are paying for these homes. The only shift that we've seen is that a buyer who was potentially $1 million customer has now had to shift and has become an $850,000 customer. So they've needed to shift somewhat their guidelines and what they feel that they can comfortably afford. That being said, they're still looking, and there then becomes other buyers for that same $1 million listing. It's just a shift in who's purchasing the home.
I understand.
But yeah, we're still struggling with the inventory, so that's really the
people are
honest truth.
definitely having fears to
But we
list
have
their
buyers.
house. No, I mean there's definitely people who want to sell. We were speaking of this prior to this video. There's people who want to sell, but they just have fears of they don't understand that they're still buyers, and they're worried about the interest rate on their future purchase if they sell this home. So they're kind of sitting on their house, and they should really listen to this video.
Yeah, I think it's really up to us also as professionals to educate them.
Absolutely.
Take our time. Maybe be patient and explain that it's happening. Look, the volume obviously is down nationally, but there's still sales. We're not that far in sales compared to 2019 levels. We're a little bit lower. So if we take out the pandemic, okay, if you would just compare 19 to 22, like this quarter, it is down, but it's not by much.
Yeah.
So,
and also the value of the home is still higher. So they still are, like this is specifically maybe in the five towns, what I've seen, there's certain areas that they just a few years ago bought their house and they're selling it for like $500,000 more. So their value is higher. They should really not be worried about the shifts in the interest rates to put their home up for sale.
And I think that people also need to take their time, now more so than ever, when they are hiring, whether it's real estate agents, to make sure that you have, as a seller and as a buyer, you have certain expectations of that person and a certain level of professionalism and how you plan to market the house, and all the steps you'll take in order to get top value for that home, as same way that when you're looking for a mortgage broker, banker, whatnot, you want to make sure that this person is experienced, that they know um, exactly what the best options are going to be, and they're going to be able to hand hold your way through the process. And I think that's really important for a lot of people these days.
Yeah,
Absolutely.
yeah, to that extent, I just want to actually praise both Sarah and Rosanna. We have done a lot of work together, and I can personally tell you that the care that they have for both of their buyers and sellers is really unmatched.
Thank you, Robert.
No, no, and I'm not just saying because you're here. I know we talked a lot about this. So anybody considering buying or selling a home, the links for their information will be provided in comments and below this video. So please definitely visit, and you can find them there. They can also answer any of your real estate questions for whoever has them.
And if you guys have any questions, you know, share them in the comment section and we'll do another video.
Yeah, no, hopefully this is just a start. I'd like to ask our viewers to please recommend other topics that you'd like to hear. Subscribe to our channel, ask comments, ask your questions in comments, and we'll be happy to get back to you. Well, thanks for coming over. Thanks for doing it. Hopefully, we provided value, and let's definitely do it again and be, be a center of knowledge for those who need this education. Meaning our potential sellers and buyers in your area of where you operate.
Thank you so much,
Thank you
Robert.
for having us.
Thanks
All right.
for having
Thank
us.
you. Thank you, ladies.
Thank you,
Bye bye.
viewers.
Bye. God bless you.